Hi, I'm Kevin McPartland, Head of Market Structure and Technology Research at Coalition Greenwich. I'm excited to be here in New York in Trumid's office to chat with Mike and Jason. Guys, thanks for having me.
Thank you.
Mike Sobel is the co-CEO of Trumid. Jason Quinn is the Chief Product Officer and Head of Sales. So we have a lot to talk about. We'll just jump right in. Mike, we spoke about 4 years ago in a similar forum. A lot has obviously changed since then. Total market volumes are up 60% in 4 years, which is pretty incredible. E-trading is up from less than a third to almost half at this point. So Trumid, has played a big role, obviously, in shaping and in driving all of that forward. Do you feel like that momentum can continue going forward, or are we hitting a point where there's not much growth left?
We really do feel like the momentum can continue, and in fact, I think on a day in and day out basis that interest in not just electronic trading, but market structure and technology and new ways of doing things. There is as much kind of momentum and enthusiasm about the sort of thing that we're doing as there's been at any point in the now, believe it or not, 10 years that Trumid has been around for. I think that the 4 years ago, or certainly 5 or 6 years ago, the conversation really was about electronic trading and how much of the market can trade electronically. And to some of the points you made, I think what we've seen is not only an increase in how much is trading electronically, but even more so, an increase in just how much is trading, period. You mentioned 60% growth in market volumes, and over the last couple of years, the average daily volumes in U.S. credit are growing quite a bit faster than the historical trend. And from our perspective, that is a function of maturation of the market, of which e-trading is a really important part. So it's the use of technology, it's the availability of data, it's access to the market for non-traditional players, such as systematics, obviously, that's increasing the velocity, it's increasing the sort of sophistication, the speed, the scalability of decision making. So from our perspective, while yes, we think the electronification story is still a big and exciting one and is very much intact, we're moving to the next chapters of that story, which are things like automation, systematic trading, and all of that sort of stuff. And that's where we see real enthusiasm from all segments of the client base for new tools and better ability to access the market, use those tools for collaboration, for innovation. So this space that we've been in for a while now, we think really is more exciting than ever.
And you're right, the whole market, right? 10 years ago, we never would have imagined the $90 billion day, right, which we had in April. And then electronic trading is growing with that, right? It's not, the market's not growing despite of it. So it's incredible.
There's a real kind of virtuous cycle between using technology, the availability of data, electronic trading, automation solutions, and not just market volumes, but really what that means is liquidity in the asset class. So more liquidity, more transparency and efficiency leads to more participation, and therefore, liquidity begets liquidity, as we've all been saying for a long time.
Yeah, I think a big part of the growth is the innovation in trading mechanisms, trading protocols. And obviously, you guys have been incredible at that, continuing to come up with new ideas to solve problems that have been around for a long time. I'd love to hear a little bit about, I guess, both some of the new ideas that have worked that have surprised you, and then maybe also some of your good ideas that didn't work as you expected and surprised you on the downside.
Yeah, I'll start with the second part of your question. So I'd say the one thing that surprised us the most, well, maybe goes back to the conference down in DC just a couple weeks ago at Phil's. It felt like one of the major themes at the conference was about dealer streams and D2C non-comp trading, maybe on the back of what's happening in portfolio trading and the desire for the dealers to want more efficient mechanisms to move that risk, or at least to advertise to their best clients. When I was sitting there listening to it, I was like, geez, we kind of have that. We have this attributed trading workflow. We've been working on that for years. But I'll admit that while we did that 6 years ago, over the course of the first few years, while we were kind of establishing the infrastructure and getting dealers connected for it, I got a little bit frustrated with what I saw as the dealer's ability to stream the best access to the clients, how serious the market was in terms of kind of taking that particular flow, which is the traditional OTC flow, to a more electronic solution, a more structured solution. But as soon as you're sitting there ready to kind of like, hey, guess we got that one wrong, we're back at Phil's, like 6 years later, and it's a major theme. And so it kind of feels like maybe we skated to where the puck was going. So I'm really happy at this stage that we have attributed trading where it's at, and the infrastructure completely built, and it's all there for the taking for clients on both the buy side and the sell side to take advantage of it. In terms of what I'm really excited about, I mean, first of all, what we tried to do with the Trumid platform was to put multiple ways of trading in one system. That's not an easy feat. You can overwhelm clients with that, but the last round of adding workflows to the platform, we're trying to build the two major list protocols almost in parallel, both PT and RFQ. I'm really happy with our ability to kind of pull that off and see the success that we've seen with that. So while they're not like new workflows, the ability for us to build them both and incorporate them into our platform and wrap up or round out the ecosystem, I think the system's in a really great place. I'm excited about it. And I think it opens up the door for lots of innovation across all the workflows from this point forward.
Yeah, I mean, RFQ is a great example, right? It's as old as electronic trading, yet it's been effectively completely reimagined in the last few years, right?
Yeah, I mean, listen, you think about RFQ, it's pretty straightforward, right? It's like I ask for a bid or I ask for an offer and I wait for responses. There have been some innovations in it, but like, there are ways in, the small details, whether it's the list size, or the different types of analytics that you put inside of the offering to make the decision making for the initiator of the RFQ easier. Automation within RFQ. Can you include newer types of rules that help the clients get more and more comfortable utilizing that automation, which is an amazing workflow accelerant, right? Like the best way to remove clicks is to make it so you never have to click. So I mean, RFQ is a tremendously important workflow for the market, for the asset class of credit. And I think there are some really interesting things we're going to be able to do with RFQ, or at least RFQ as a component to a broader automation offering.
Sure. So let's talk about attributed trading, because that is something I think really unique you guys are doing.
Yep.
Just to oversimplify effectively, right? So the dealers can stream prices, the buy side sees those, and the dealers that they're commissioned with, and they can effectively click to trade on those prices.
Yes.
Oversimplified. So can you give us a better description than I can and sort of talk about where that's going?
What is attributed trading? It's non-comp dealer to client trading. So that just means it's not an RFQ where you're putting multiple dealers in comp. But again, it's meant to mimic the traditional OTC workflow that has existed in the credit space for years. So what does that mean? If you're a market maker, if you're on the sell side, what you tend to be doing to kind of put the sign outside of the building that you're open for business is you send your market data to your clients. And the way that has historically been done is pretty unstructured by sending out runs in kind of, like I said, an unstructured format. Clients consume those, and then they either pick up the phone or send an IB when they have a trade to do. Maybe they're talking to a salesperson or they're talking to the trader directly. So attributed was designed and built to be a structured version of that, starting with the distribution of market data, addressing some of the concerns that the dealers had from years back, which is total control over where the data is going, the ability to subscribe clients based on how they want to their streams. We also support full-blown tiering, which means dealers can send different prices and different sizes to different groups of clients.
Which is what's been around in FX and in treasuries for years, right?
Yeah, and it's important because if you get to a place where you want to be able to stream systematically, you can't have one price for all. Otherwise, you end up sending out the lowest common denominator, and guess what happens? No trades. So the infrastructure is all there. We have every major dealer in the marketplace connected to stream to clients via Trumid. And then around that is a full-blown structured negotiation workflow so that a client can click to engage an axe that they see, can negotiate and trade. We even took it as far as supporting firm algos that can stream for the clients. And we created a workflow that makes it so in under a second or two, a client can click to hit or lift and be done. And more recently, like I said, which brings a smile to my face, the PT reoffer theme is exactly what attributed trading was built for. And we included newer tools for the buy side because, of course, we have like thousands and thousands of access streaming across Attributed. So that's a fire hose of information. So what is the buy side going to be able to do to make sure they can discover what's most relevant to them? That's some of the magic that we do on our side, which is design the tools to make it really easy for the buy side to make that discovery and hopefully find the most important axes that fit them as quickly as possible.
So you mentioned portfolio trading reoffer. Can you explain that workflow as well? Because I think that's a new one for you.
Yeah, good one to clarify. Lots more portfolio trades are happening. That's been in the news plenty. And so dealers are onboarding a bunch of risk, and they may have methodologies for how they're hedging that risk, but of course they're in the moving business, not the storage business. So they want to be able to get out of line items as quickly and efficiently as possible. So when they do a big PT, they want to get their best axes on the back of that PT back out to their best clients, and they want those clients to discover those and then engage them to trade them so they can move them off their books. Before what we were doing on the Trumid side, it's predominantly done via spreadsheet, which feels very, many years ago. So it's not the most efficient mechanism for that workflow. And so, it's exciting to see how attributed trading is being utilized for that reoffer flow.
Right.
I think we're seeing with the evolution elsewhere in the market, portfolio trading, obviously a very important theme over the last few years, and one that we've invested heavily in and are very proud of what we're doing. Those flows, that evolution and maturation of the marketplace is creating new needs, new opportunities for both liquidity providers who now have all of this inventory that they need to distribute, they want to distribute, they need to distribute efficiently to the client base. Clients, the buy side, are faced with a deluge of data. There's more and more information coming to them. They need ways to aggregate that information, to filter, to engage, ultimately to execute on those trades. And it turns out that a number of the modules we have, attributed trading being the best example of that, are really incredibly well fit for purpose. So as the needs and desires of the marketplace continue to evolve, we're really excited to see that the tools, the rails that we've already built and have been tested over many hundreds of thousands, if not millions of trades for the last 6 years, integrated with everyone's internal native systems, become that new use cases emerge, which is precisely when you innovate and collaborate with clients, you want the applications and the use cases to continue to evolve and grow and expand, and we're really excited to be seeing that over the course of the last year or two.
What I find so interesting is, despite the importance of automation, the importance of the user interface and how the buy side or sell side user consumes all that information and makes some sense of it, is as important as it's ever been, right? And I know that's something also you guys have spent quite a lot of time thinking about.
That's absolutely right. There's a tremendous amount of information, and the ability to present it thoughtfully, and then of course to reconcile that with the buy side's own agenda through they've blotters and blotter scraping and placements and some of the nuances of how we're integrated with the buy side. But if you're a buy-side participant in the marketplace, you're receiving these trading opportunities. You want to be able to aggregate them and filter them and make decisions not based not only on QSIP but also on factors. So giving the buy side the ability to consume, sort, filter this set of opportunities by rating and maturity and sector, yield. And then engage those opportunities efficiently and trade seamlessly. It really is. We think it's a real winning offering, and we've seen fantastic uptake from both sell side and buy side. So obviously we're really encouraged and proud that this offering that we've built over years turns out to be, we think, really like just the right thing as the market evolves.
For sure. So in that same vein, one of the other things that's been talked about for years and years now is the idea of the buy side moving to a fixed income EMS with API connectivity into the venues, a little more equity-like. I won't overemphasize that because we know there's a lot of differences. While there has been some progress, I think everybody would agree it's been slower than a lot of people would have expected. So where do you sit in that whole evolution thought process? Obviously, you've got a great interface. Some of your peers do as well. But Where do you think the EMS sits in this whole conversation going forward?
Yeah, and look, we've talked about a few of these things where some of the things we're talking about certainly exist in other asset classes. So the evolution, the maturation of the U.S. credit market or credit markets in general, of course, sort of rhyme but don't repeat with the way it's gone in other asset classes. And I think, the API access and EMS, like everything, is an example of that. We really pride ourselves, and I think have deliver on meeting clients where they are. For us, core competencies, differentiators are our flexibility, our ability to collaborate and tailor solutions and what we're doing for the idiosyncratic needs of our clients. So as it relates to how they access the platform, where they consume this information, we are certainly flexible, if not agnostic. Accessing, we want more clients to be able to efficiently and effectively access the liquidity pool that we are operating, however that takes place. We absolutely pride ourselves on our UI. We have Jason and team have done an amazing job of building our suite of protocols as an ecosystem and capturing all of the kind of complementarities and synergies between those different workflows. So, I think we and other platforms also, venues also, are delivering some of what is traditionally delivered by an EMS. That said, we work with all of the EMSs in the marketplace. I agree with you relative to where we may have been. We talked about 4 years ago and how much has changed since then. Some things haven't changed a whole lot in the last 4 years. And does that mean, that kind of idea doesn't have legs in our marketplace, or it's just not yet? Remains to be seen. But again, we work with all of the, whether it's EMSs or OMSs or aggregators. If what we see with clients is not in terms of evolution versus a few years ago, no one is talking about whether if they want to trade electronically. It's how do I trade electronically? How do I access these tools as efficiently as I can? How do I make, manage more AUM, make more trading decisions using kind of existing resources and the tools that give me efficiency and scalability? And if those are various ways to aggregate and access the marketplace, including Trumid, we're entirely supportive of that.
Right, so let's transition over to what we mentioned a little bit earlier about automation. Obviously, that is a big part. Like you mentioned before about systematic, Jason, you talked about automation. That is a part of why volumes are starting to raise the way they are. So what does that mean for Trumid specifically? What are some of the ways you think you can help to automate those same workflows and price discovery processes that you've been building for?
Yeah, so first I'll start with the automation that has existed in the market and what currently exists within RFQ, tremendously important. Mike said, I spend tons of time on our UI and thinking about workflow and user experience we do as a team. The best way to remove clicks is to make it so you never have to click. Automate everything to the degree you can. But the automation that exists is primarily the hit lift decision within an RFQ. Mm-hmm. So it feels like that as a great starting point, there's a lot more we can do. So first of all, we have started to deploy automation with our swarm workflow, so that orders can be automatically created based on certain criteria that a user gives the system. And again, if there's an opportunity to trade in a swarm, which is different than RFQ, very different, more like an auction, and it meets that criteria, the order can be created on behalf of the user and they just get a fill back. So that's another great starting point. But when you wrap it all together, our vision for this really stems from the goal for creating the ecosystem of workflows on the platform. So what we want to really be able to do is have automation move higher up and have the machine make the decision around where to go with the order to help get the order filled. So a nice way to think about this is, we talked a little bit about how the market's becoming more systematic. There's higher velocity in the market. Volumes are growing. Average trade sizes are lower. There's a lot more data in the system. So there are those systematic players. Automation, especially when you're talking about automation that's higher level, that goes across protocol, is a great way to make a non-systematic participant more systematic. Imagine a world where you could tell a system, hey, I'm a buyer of these things, or I'm a seller of these things. This is how long I want you to work it, and these are my limits, or peg a limit to a certain objective price, and these are the sizes. And you believed that the system had vibrant liquidity in all the relative workflows and can go out and smartly get you executed. Because think about this too. As the velocity of the marketplace continues to go up, the ability for the human with two eyeballs to pay attention to all the opportunities is not that good. So you really need these tools to ensure that you're taking advantage of all the opportunities that exist in a system like ours, because at the end of the day, that's how you achieve better execution over time. There's going to be some work in kind of proving that the machine is doing a really good job with that execution, but we believe we have a really good methodology or approach that's really, I think, makes sense for the U.S. credit, for the credit in general, the credit space. Pretty excited about it. I mean, I think the market's at a really interesting point in time where we've had this evolution of more and more of the flow becoming electronic, volumes growing overall, a lot more data available, new entrants to the space. I think what's going to happen over the next 3 to 5 years is going to surprise some people. And I think it's going to come in the form of the automation story.
Yeah. So if I had an order, the system knew about it, and it said, hey, look, there's a price that suits me in attributed trading. Do a little there, and hey, look, a swarm just started.
Yep.
Do a little more over there, and right, you can sort of just set it and forget it throughout the day.
Correct.
But you're right. I guess that's interesting, right? Being able to, for the end user to be able to measure that execution and feel comfortable that, okay, I trust the machine can do as well or better than I can.
Exactly. And so the trick is going to be the way we deploy this, the way we engage our client base, get feedback, get a good understanding of what makes the average user more and more comfortable using these tools. That's not something that's going to happen in a 3 to 6 month period of time. But we're going to wake up 5 years from now. I guess the last time we did something like this was 4 years ago. I guarantee you, if we do this 4 years from now, we're going to be talking about the graphs for all the automated volume in the market, or automated volume across protocol, where it's kind of like the client's agnostic. Just get me filled. And it's, like I said, it's really exciting to me, because I just think the market structure is going to, while we thought it's evolved a lot, it's about to evolve a lot more.
Yeah, I think you're right. I mean, you talked about attributed trading, almost like you were sort of early to the party, and then everybody's come. Automation, in some ways, it feels like it's going in the same direction, right? We're still early days, and as people get more comfortable and the systems evolve, it's gonna
Exactly.
come further. So where does AI or ML, or does it fit into that vision of automation for you?
Very, very much so. In a way, it's kind of right on time in a few ways. One, we recognize that the decision making around investment decision making and trade execution is something that the users of our system and everyone in our market has done kind of on their own for a very long time. So introducing new ways to make decisions and handing the keys over to some extent is a delicate process. So the increasing acceptance, enthusiasm, sort of awe of AI as a technology and the tools that are available, and I would lump sort of machine learning in with that. But the acceptance, the recognition that given data, that technology can reach conclusions and make decisions and be very much a co-pilot for humans in kind of traditional decision making and action taking, is consistent with the vision that we have for partnership, frankly, between the platform and Trumid as technology provider and our users. So the fact that everyday decisions are being increasingly made by technology tools often leveraging AI and ML, really paves a pathway and also gives us tremendous opportunity to learn from what's happening around us, around us in other industries and all of the things that we're using every day. So real complementarity between those technologies and what we're doing here, and certainly as we look to maintain agility and efficiency internally and stay at the and leverage all of the investments we've made over the last decade in keeping our technology and our architecture and infrastructure at the leading edge, and frankly make use of the tremendous amount of data that we are capturing each day. Those same tools are really important for us. So we're actively deploying AI applications and machine learning models within our everyday activity, and it is definitely enabling us to keep moving quickly and flexibly for our clients.
Yeah, and I think one point I would add on that is I like to think of us as a technology company first. Mm-hmm. We want to be the absolute best technology company in the space, and we're leveraging these tools as well to be crisper and more efficient at actually doing the development itself, letting these tools write the code for us. Our goal is to do a release every day. Right. When you can release at that cadence and you can bring quality to the marketplace in doing that, you engage with clients, you can collaborate with clients. It's no different if we're talking about an automation tool or RFQ or portfolio trading or attributed trading or swarms. We're engaging clients every day. We have good ideas. We want to keep refining the system. We want to be able to come to market quickly with really smart enhancements, and we think we're in a great position to do that, and AI is really powering it on the development side.
Yeah, it doesn't replace the best developers, it just makes them even better.
It's leverage is really what it is. It becomes like the best assistant you've ever had, and makes you more proficient at your job, and when it saves you time, you can use your brain focusing on the harder problems, and that creates a really nice cycle of the way we work internally to deliver extremely valuable tools to the market.
We're automating internally too. We're practicing what we preach as we try to take these, albeit electronic workflows, but workflows that are engaged with each step being taken actively by one of the people on our platform, and beginning to give our users the ability to automate some of those tasks. We're doing the same things internally in order to do more and move quickly and be, what we pride ourselves on being, agile and collaborative, and move quickly, and to Jason's point, release small amounts of code and make fixes and improvements every single day. That requires automation, or certainly benefits from automation. So we are doing these things, which really helps us think about how to deploy that most effectively to our clients.
To wrap us up, it's just something for fun. So you're both like fintech, you've been building technology for a decade, so you know what's cool and you know what works. So I was going to ask you about books or podcasts, but everybody does that. So why don't you tell us, what do you think is like the best app or the best tech you've got on your phone that you use regularly that really stands out to you?
Oh man, I'm not as up on the best new coolest apps as you might expect me to be. In terms of the app that I'm getting the most use out of these days is just my Spotify account. It's the summertime. It means a lot of time in the backyard playing music, and we're talking about some of this kind of like automation and matching stuff. And I think that I don't have access to good new bands and ways to hear new music other than through my kids, and I am finally getting to a spot where there's some overlap in musical taste with my kids. So I am finding bands that look and sound like music that I know that I like, and finding good overlaps with musical taste with my kids, and getting really great use out of that's an app that's getting a lot of play on my phone and in my house.
I love that. And you guys are known for the music in your office for a lot of years.
I like this question a lot. I think my answer is going to make you laugh, but I have a little bit of a sickness, I will admit. I can see when things are off by a pixel. I'm a perfectionist at heart, but I have come to appreciate when there's something that's created that I'm using that I could tell that special care was taken to make it literally as easy to use as humanly possible. So I've got 3 teenage boys. The Chipotle app is actually pretty close to my heart. They love it. It's not necessarily me, it's them, I promise. But when you use it, I could tell, like, they studied the interaction, the workflow. They tried to figure out how to make it as easy as possible to place that order. And I guarantee you that more Chipotle orders come by way of the fact that their app is as good as it is.
At least from your house.
Yeah,
Everyone's swarming to it.
Yeah, exactly. But no, again, it's just an appreciation for the design, the interaction, the UX, and I believe it matters. And I could tell whoever worked on it for Chipotle did a great job, and I think they're being rewarded for it.
That's fantastic. Great. Well, thanks both again for your time. Thanks for having me to your office today. Really appreciate it, and look forward to seeing you again in 4 years and where this has all gone.
Cool. This is fun. Thank you.
Thanks so much.